Hey guys, it's Max Convexity. Hope everyone's doing great today. You've reached the covered caller, the daily midday show. Let's look at these funds and see how everything's doing. First of all, let's just look at the heat map for the whole universe of ETFs and see what's shaking. Well, upper left corner is equities. They're in the green today. Lower right corner is bonds. They're, for the most part, slightly green as well. Some international stocks and some commodities are in the red, Bitcoin in the red. Everything else doing pretty well. Maybe not regional banks. KRE is regional banks. Energy stocks not doing great, but other stuff doing all right. We have some big earnings coming up this week. Look at tomorrow. We have Procter & Gamble, Pfizer, but tomorrow after the close, we have Microsoft and AMD, which are big for the YieldMax universe, and the Curve universe for that matter. Then we have MasterCard and Boeing on the next day, Facebook. Thursday's a really big day. Apple, Amazon, Intel, Booking.com. All right, so we're going to have a pretty active week this week, I would imagine. All right, so now let's check out the Defiance trades. We'll start with QQQY. These guys wrote options today. They're going for a total profit of 1.4 million, and right now they're realizing 1.4 million. Okay, that's the good news. The bad news is even after that 1.4 million, if they do realize that here in the next few hours, they're still down 41 cents a share on the month. So it has not been a kind month. This has not been a great month for QQQY, to say the least. The dividend estimate currently sits at 85 cents, which is better than it was, but it's still low by historic standards. Like I say, QQQY has been getting beat up. It looks like they're going to pay a fairly low dividend, and they've had some pretty big pullback in the NAV lately. All right, so let's check out JEPY. JEPY sold these options for $22. Right now, they would cost $5.90 to buy back. So JEPY is going for a profit of $462,000. Right now, they're only realizing $338,000. If they go ahead and finish like this, they would still be down 27 cents a share on the month. So they're also having a rough time. Dividend estimate is 56 cents, which is 10 cents better than last month's, but it's still, it's about average by historic standards, maybe a little bit low average. Dividend is the least of JEPY's problem. Now, IWMY is actually killing it as far as trading goes. They're actually up 26 cents a share. They've been up as much as 31 cents a share at one point. These guys are doing well for the month. Today, though, they sold options for 15, and right now they would cost around 23 to buy them back. So they're a little bit underwater. All right, let's go check out the charts of these real quick. Then we're going to check out the chart of USO as well. Finish up with the Defiance section. Okay, so here's IWMY. They need to be somewhere in that profit box. The market's selling off, or their market is Russell. It's selling off. So right now, that's why they have a loss. JEPY trades SPX options. Now, these are 30-minute bars. So the market opened above max profit and then sold off in the first hour and actually went back down inside of the profit box. It was still profitable, but less so. Now it's run back out of the profit box. So now we're back to full profit on JEPY. I believe the spreadsheet said we were down a little bit, but the spreadsheet's 50 minutes behind. All right, so now we're going to look at NASDAQ. This is what QQQY trades. The same thing as JEPY. They opened in the full profit land, then the market started to sell off, and they were about half profit for a little bit. Now they're back to full profit. Okay, well, that's good news. Let's go back. I wanted to check something real quick on that JEPY. Yeah, the spreadsheet shows that they're only making $338,000. This spreadsheet hasn't updated probably in about an hour. It doesn't update live anyway, but this is definitely a full profit because the charts The charts are faster than the spreadsheet. Let's just say that. I wanted to correct that. JEPY is having a great day. So 2 out of 3 of these funds are full profit. And IWMY is actually, yeah, the spreadsheet's still showing a small loss. But anyway, the spreadsheet's wrong. The spreadsheet is wrong. Just to reiterate, here's SPX. These are the options they sold. We'll zoom way in here. As long as the SPX closes above 54.65, it's a full profit for these guys. And right now, the S&P is trading around 54.78. So, all right, we'll take it. Now, let's look at USO. This is the other Defiance fund. They closed down TRES, so we don't have to look at bonds anymore. Bonds are boring to look at. I like the idea of TRES, but the execution, maybe the timing wasn't right. I have a feeling the next 6 months are going to be great for TRES just because they shut TRES down. But it's a different kind of fund. So we aren't going to worry about TRES. USO is a more traditional type of Defiance fund where they do the same thing that QQQY and JEPY does. TRES was doing something different. All right. Well, in any event, let me see what happened. Okay, let's go back. Actually, I said we're going to check. Let's check the spreadsheet and not the charts. All right, so okay, in yellow are the options that are open. These options, and it's one strike, 77.5. They sold some for 152 and they sold some for 147. All right, but it's a 77.5 strike. They received around $1.50, which would make their break even around 76. Right? I mean, $1.50 minus 77.50. That's easy math. Well, the current price is 74.88. Now, these options don't expire till Wednesday. So, but that would right now they're quite a few points in the money, unfortunately. So it's $1. I just did it real fast in my head. It's $1.12 in the money. So let's just figure that out real quick. If I'm just saying, if it finished here, these funds would still be slightly profitable. Instead of making 185,000, they would only realize 48,000. Luckily, they sold these options for enough money that even though the market's pulling back, they're still all right. So let's do this real quick. Let's look over here at USO. All right, remember the strike was 77. They sold them Friday, so we just go to 70, and they sold them for $1.50. So all we have to do is do this, pull it out till Wednesday. Apologize, I didn't do this before. And then we just have to make it $1.50 tall. So it has to go down to where the break even is, which is 75.98. All right. So we need price to finish in there for us to have a profit. And my fast math calculation was messed up. It's actually 212 in the money. Okay, so actually, I'm sorry, these would actually be a small loss right now. In any event, we have something to root for, and at least I have the profit box drawn, so tomorrow we'll check it out. We know where we stand. We just need oil to turn around and go back up. You remember on the heat map, oil is over here, XLE and XOP. This is oil section, and it's all red. So not a good day for oil. Maybe it'll turn around tomorrow. Okay, now let's go to the yield max. And I'm always going to start with the ones that have the inverse funds. So we'll look at Tesla and Crash first. Yellow profit boxes are Tesla. Red profit boxes are Crash. If you own both of these funds together, you want price to be between what I call stay in the fence, stay in the yard. You want price to, to not jump over this one or jump over the red ones. All right, because you're in a sense doing you're essentially doing a short strangle. And so you want price to stay within a certain area, or if it goes outside the area, you start incurring losses. Okay. So anyway, market's really strong today. Tesla's up. The other thing that confuses, or that, let me think about that. Oh yeah, I take that back. I was going to say Tesla had earnings last week, right? Tesla's earnings are over. That's right. So look at this. This is an illustration of how IV works. Last week with the earnings, look how far they were able to squeeze the strike prices apart, because the earnings elevates the IV and they can go out a little bit further. But now that earnings are over, look how much closer these strike prices are. Look back here when there was no earning. Look at right here. This week they were really close. You can tell, because what happened is after many weeks of no volatility, the volatility just gets compressed and compressed and compressed. And then you can see it breaks out, and then the math has to adjust to the new reality of, hey, this market's running. So then they start spreading them real far apart, but then that's too far. And then IV starts coming in, and then earnings are announced, and IV comes in more. And that's where we are now. IV's coming in. All right. So let's look at Coinbase. So we were looking at this for the stake in a second. Jackson's chewing on something. Jackson, what do you got there, buddy? Okay, it was a cap from a soda. All right, so this is the same thing as Tesla. They have a bullish fund, which is called Coney, which is the yellow profit boxes, and they have a bearish high yield fund, and it's called Fiat, F-I-A-T. Now this stock has earnings this week, and you can see they got the strike prices pretty far apart, just visually looking at it, and they were pretty far apart last week too. Now the week before that, they were actually really close together. In fact, they were too close, because then on Monday it jumped through the bullish strike. But anyway, like a bunch of people own both of these together. So like I say, if you own both of these together, you're rooting for the price to stay in between them. If you own just one or the other, a lot of people just own Coney, which is the bullish one. And in that case, you're rooting for price to go right to the top line. Top line of the strike is max profit for that fund. Some people might just have the bearish fund. If you're bearish on crypto, this might be a good way to express an opinion, and they might just have fiat. Well, if you just have the bearish fund, you're rooting for price to go right to the bottom line of their profit box. Price goes to the bottom line or below, it's a max profit for fiat. If it goes to the top or above, it's a max profit for Coney. If you own both of them together, the reason you don't want them to jump the fence is because if the losses will add up on one of them faster than the gains will. The problem is the one that's going to make money will be capped out, because covered calls get capped out, but the other one won't be capped out, and it'll keep incurring a loss. And anyway, we saw that happen to Tesla and crash a few weeks ago. All right. So we'll just see what happens here. This should be interesting if they got these far enough away that the earnings announcement doesn't make this one jump the fence. All right, so there's one more. I thought about just starting to cover the yield max funds that do inverses. That would just mean I would cover NVIDIA, Tesla, and Coney. But I figured they're all going to add inverses, so I'm just going to keep doing it like I'm doing. But this is the first week for these guys. Their inverse is called dips. And they had two strikes. I didn't really understand why they sold that strike. But in any event, I'm just going to say their far strike right here is, you want it to be between the outer strikes at the very least, if people own both of these together. If people just have NVIDIA, you want the market to move up and to go to 123 by Friday. If people just have dips, which is the bearish high yield fund, you want price to go down to 106 by Friday. Okay, so let's check out. I mean, I figured they're going to add one of these on Mr. soon enough. They'll have, inverses on everything. So, but I really did think about just specializing in the inverses. I don't know though. These regular bullish funds are such good funds too. I mean, All right. Now these guys are just perennial, perennial fence jumpers. Their strike's always blowing out. Look, for 3 weeks in a row. So this week down here, they blew out their strike on Friday, but then on Monday of this next week, strike blowing out. Then they roll it, boom, strike blowing out. And it comes back a little bit. But we'll see what they do this week. I guess their market's finally started to chop a little bit. We'll see what Mr. does this week. Like I say, it won't be too long before they have an inverse Misty. I wonder what the symbol will be. NVIDIA is DIPS, DIPS, because it's the opposite of chips, supposedly. Even though chips isn't NVIDIA's symbol, chips is what they make. Fiat is the opposite of Coinbase, they're saying. Is, paper money being the opposite of digital money. Anyway, on Mr. MicroStrategies, I wonder what the opposite would be on that. Who knows? Who knows? Anyway, if you have any suggestions, email Gavin over at Tidal. I'm sure he likes to get those suggestions. He's the guy that decides. He's the decider, as George Bush would have said, famous Texan. All right. All right. I think that's about all. Oh, yeah. I'm sorry. It's not about all. We have to look at AMD. Now, these guys have a 4-strike ladder. These guys also have earnings this week. And so those are pretty far out of the money, and they may need it because this could turn around and run. It could turn around and run after an earnings announcement and blow out the strikes. But they've got a 4-strike ladder, and they've got it put out there far enough where hopefully they'll be all right. Now, it's also important to remember AMD is a covered call that the fund QQQ sold short. In fact, it's one of only 2 covered calls that QQQ has. I suspect they'll be adding more. All right, so now let's check Amazon. All right, they have a 2-strike ladder, and they're just plenty far out of the money. These guys are in good shape. You can see since Amazon's turned around and started going down, they've just been rolling the covered calls down, behind it. So we'll see what happens there. All right, so now you guys aren't into option trading. You don't have to listen anymore. I'm going to talk a little bit about some of these option trades. So the $1 million babies trade where I showed everyone how to hedge a portfolio with options. Anyway, let's look at this New Year's Eve $1 million baby. It was up like 30,000 last week. It's only up 15,000 this week. What it was a trade. When do we put that on? I put that on right about almost perfectly at the top of the market. So far, I called the top pretty perfect. Look at July 10th. Okay, check this out. When I made this content. All right, July 10th. Friday the 12th, 11th, 10th. Okay. So I made it right there at the close on the 10th. The market was at 56.33. Within a couple of days later, it was up a little higher, but that would have been a great place to put on $1 million hedge. Well, sure enough, the market dropped, and your $1 million portfolio would have been down last week like $50,000 or whatever. But the hedge that I showed everyone how to do was up $30,000. So if you wouldn't have got a margin call, or you wouldn't have had to been worried about your account or anything. Now, since the market's starting to bounce, the hedge isn't worth as much. But of course, if the market bounces up to here, that's fine. The idea is you don't need to cash in the hedge. It's just there to give you a get out of jail free card if you need one. Ideally, you don't want to have to use it because it's a taxable event. What happens lots of times, what happens sometimes is we have a quick little 7 or 10% pullback, and then the market will come right back. Anyway, that's this. This strategy is designed to catch that kind of stuff. Okay. Anyway, I might have some more content on that. I don't know if people are interested in that. Then also I have the QQQ, the new curve fund. They have 2 covered calls, and I put them on here. So this one right here is up $265 today. They have a covered call on AMD. Here's their position. They sold the 160 calls. They sold them for $1.75, and right now it would cost $2 to buy them back. But they also own the stock, and the stock's up today. The stock's up more than 1%. Stock's up, 1.63. So 100 shares of stock is up $163, and this covered call is down 25 cents. So the trade's up like $150, right? Anyway, it's a nice trade. It's doing well. And that is what it was up, right? It was, well, this is saying 278. I don't know where it's getting 278. Oh, they have 4. No, they just have 2 options. Well, I don't know. I'll check into that. Oh, I see. Because they have 2 options. That's right. That's exactly right. So they're up about a little bit more than 300 on the shares, but they're down about 50 on the options. So, okay, I got it. They're up a little bit more than 300 and down 50. Okay. All right. Well, I also have some trades on here for some upcoming earnings announcements, like Apple announces this week. Right, the dotted line is where price is. What I'm playing for is for the earnings announcement to make Apple's price go up a little bit. If Apple's price moves up 5%, this trade could be worth $400 or $500. But if Apple's price moves down 5%, this trade's only a $200 loser. These are the kind of option trades I like. I'm going to make some more content on these pre-earnings trades. It's too late to do this one, but there'll be some, we can do some other ones. So I'll make some content on this week. Maybe we'll even do an Amazon trade or something. Maybe we'll just do an Amazon one right now. Check this out. These trades are so easy to do. You go Amazon, then you go double diagonal. All right, and you want right here is the expiration dates. The whole thing about this trade and what makes it work is they have staggered expiration dates, and the short expiration has to be in the week that the earnings happen. So that's this week. So the short expiration, so the short options expire Friday, the long options expire the next Friday. Okay. All I do is move all the strikes in together. That's called a double calendar there. And then if I'm bullish, I drag the calls out, the calls that are sold. So the calls on the bottom row. I drag the calls out until I get a profit loss, a P&L graph that I can live with, that I like. So this one looks pretty good right here. Look, most you can lose is $365. Market goes nowhere. You can make $700. Even if the market goes way up, you still make $150. The market has to go down more than 5%. So this is a bullish bet on Amazon's earnings. If it goes down more than 5%, you're going to lose. But if something bullish happens, or if nothing happens, or if volatility goes up, and which is what you're really hoping for, you're hoping for volatility to go up and take it off right before earnings. When were their earnings actually? Their earnings, it was like, say it's Wednesday, Amazon. It was, Amazon's earnings were Thursday after the close. Okay. Well, I mean, that looks like a great trade right there. I'm just going to hit save trade, and we'll just keep an eye and see how that one does. Amazon earnings trade. We'll just monitor it all week and see how it would have done. All right, guys. Well, I appreciate you being here. I'll make some content. I'll explain exactly how those earnings trades work, and I'll share the links in case anyone wants to do some in their own account. But I just thought it might be fun to put on a quick one real quick. They're super easy, and they can be super profitable if you do it on a liquid stock. That's the key. The stock has to be liquid, and it has to be a stock that has earnings that week, because we want the volatility to be super volatile. Those types of trades monetize volatility. All right. Well, I sure appreciate you all being here, and I'll be back later. I'm working on some good videos. Be looking for them. If you haven't seen my curve video on QQQQ, where I review that. That's a pretty interesting fund. So hell yeah, check it out, guys. I appreciate y'all. See ya.